heart of where innovation, money, and power collide in Silicon Valley and beyond. This is Bloomberg Technology with Caroline Hyde and Ed Ludlow.
Live from New York and San Francisco, this is Bloomberg Technology. Coming up, Intel's working on a plan B. The Bloomberg exclusive on bankers eyeing a potential sale of the foundry division and more cost cuts.
And Elon Musk's battle with Brazil deepens, threatening social platform X and SpaceX's Starlink business. We have the details.
And tech fights to end the week strong as Nvidia claws back and Dell's earnings add to some AI belief. We have a key CIO on the show, but first, let's just dwell on these markets for a moment. We end the month as we started it, on the downside. We had a brutal sell-off to start August, and today we are down 1.5% if you look at the last 5 trading days. We're trying to make some power higher on this Friday, and we have certain names to thank for that. But more broadly, this has been a week we were fixated on one name and one name alone. It was Nvidia, and it just didn't live up to some of the hype. But Ed, what are you watching on the micro data today?
Yeah, you can never quite guess the news flow. Intel is up at this point the most since October of 2023. At one point in the session, the most since October or late 2022. And there is a detailed note from Bloomberg about basically the plan B, as you put it. Caroline, what are the details of that reporting? Because clearly the street likes it.
It's Bloomberg exclusive reporting, in fact, learning that Intel is looking to its investment bankers for help navigating the most difficult period in its 56-year history. Now, the chip maker is said to be discussing a range of scenarios, including a split of its product design and manufacturing businesses. I'm pleased to say Bloomberg's Ian King is the man helping drive that exclusive reporting. And maybe this should come as no surprise, but it is quite a wholesale look at the business.
After their earnings announcement, there's clearly been a lot of pressure on the company, and clearly people are looking at this company and saying, can it do what it's set out to do? So it's kind of natural, really, that the management and the board would do their job, and that's how look at their options, really. What we understand, though, is that nothing has been decided, and everything is really in the sort of preliminary stages. But I think, you know, as the market is showing us today, this is kind of a healthy and a natural thing for a company in this kind of a situation to be doing.
Well, we called it Plan B, but it might as well be Plan C, D, E. You know, things have been difficult for Intel. We use the word chip maker a lot for all kinds of semiconductor companies, but in Intel's case, it's actually true. You split the business in 2 parts. They design chips and what they do, and then they manufacture them for themselves. The problem they've got is that they don't currently manufacture chips really for anyone else, and that's the financial issue.
Yeah, it's a conundrum, right? They're saying, look, we want to be a foundry, right? We want to do what TSMC does. In order to do that, we need more factories, we need more technology, but that costs a lot of money. The money comes from the products that they sell. The amount of products that they're selling is sort of going down or not being as lucrative as it used to be, so it's a difficult situation. So the argument has been for some time now that perhaps these 2 divisions are better off separate, and that way it's going to be easier to attract outside customers.
The key issue is that Pat Gelsinger came on, and this was kind of his focus. I just want to go back to what he was telling the market, the investor base, a few months ago. Just take a listen, Ian.
We delivered a solid Q1, right? We met on revenue. We beat on earnings, a bit tepid in the first half, as we said, but we see a lot of improvement as we go through the year. And with that, obviously, the foundry business, as I would say, we're going to see progress on the foundry business every quarter from now to the end of the decade.
Maybe not to the end of the decade. How much of an impact is this on Pat Gelsinger in and of himself, Ian?
Yeah, I mean, he came in, you know, he was brought in to turn this company around, if you like, to make up for the mistakes of his predecessors. The problem is that it takes time, right? You don't design a chip one day and have it on the market the next. We're looking at years to sort of have new products out there and gain traction. So in a sense, he's doing what he said he was going to do, and at the time investors signed off on that. The problem is we're looking for the bottom. We're looking for the point at which things start to get better. And I think the problem that Pat has is a lot of things have come together, and that hasn't happened yet. We don't have a sign that we're back on the upslope.
Bloomberg's Ian King, thank you for this entire week, Nvidia earnings, the reporting. It's been quite a week in the world of semiconductors. It's been a big week in markets, particularly for technology investors. Understatement. The focus, Nvidia's earnings, that just weren't enough against sky-high expectations. But economic data, central bank speak, tech earnings at large are all on your desks too. Joining us now is Lei Chu, Chief Investment Officer of Thematic Innovation Equities at AllianceBernstein. And that's where we start. Do we know more about the world of technology, particularly the longevity of this AI investment cycle, than we did prior to Nvidia's earnings print just a few days ago?
Well, thank you for having me here. So to start, one, demand remains very strong, and we're at the very early stages. When we say demand is strong, we're seeing it across hyperscaler, we're seeing it from enterprises, and we're seeing it from nations as well. So at this stage, and then with new product coming, you continue to see very robust demand for existing product. That's something actually we've never seen before in previous product cycles. So that's a strong signal. And then two, when we say early stages, is yes, it's early stages, particularly on the supply side. We're going from manufacturing a single chip to system-level compute. So a lot of things have to come together, whether it be memory, networking, software, and even on the infrastructure side, the power, the cooling. So a lot of it has to come together, and the ecosystem itself on the manufacturing side has to adapt. So there will be unevenness from time to time. So go back to there's a demand-supply imbalance, but we remain very constructive on the outlook of AI.
Lei, AllianceBernstein, based on Bloomberg's data at least, is the 22nd largest shareholder of Nvidia. Just generally your reaction to the earnings statement call and basically the whole watch party that was happening for that name around the world.
We believe that Nvidia remain one of the leading players in the AI ecosystem. What they're doing is transformative, and it is early. So when you look at innovation and this early in the product cycle, you will see quarter to quarter, perhaps a little bit unevenness. But as we believe, sometimes you have to look out to even make money near term or long term. So we continue to have a constructive view on the AI ecosystem as a whole, and we believe in Nvidia's leading position as well.
Lei, I can only imagine how often at a cocktail party or dinner party you are taken to one side and grilled over really what the return on AI investment really is. Everyone's trying to understand when generative AI is really going to change all our lives. What do you say to that?
First, I would say, one, it's about accelerated compute. It's a new form of compute that's far more efficient and powerful. And when you look at the existing players, the hyperscalers, they're using it to support their current business model. So if you look at infrastructure as a service in the cloud, you're seeing they're spending because Azure is growing, AWS is growing, GCP is growing. So that's one use case. And then two, in some of the existing industries, whether it be advertising or life science or autonomous driving for that matter, you are starting to see generative AI actually making a positive impact already. And we actually believe this is a great time for active investing because this is a time we can use it to identify the future winners and leaders, because it is an opportunity when such a transformative product cycle happens, you redefine who are the future winners and leaders. It's a once-in-a-lifetime opportunity for these players to actually get into each other's backyard. So we actually think you're going to see more and more business model emerging. We always say, sometimes you take a step back. Without the build out of the mobile ecosystem, we wouldn't have had Uber, Spotify, Facebook for that matter. So we wouldn't have had the suburbs if we didn't build a highway. Right. It's still early. And we believe the infrastructure build out itself is already supporting some of the existing business models. And we're watching very closely across industries to see new business model actually emerging.
But what's so interesting, you've been doing this since 1999, 2000. Many people go back to Cisco in those years and ultimately how far it ran up. And this focus on one particular name, but indeed the entire tech sector. Is there just too much focus on a singular name like Nvidia? When do we start to broaden out? When do we not get the ultimate crash that we saw back in the 99-2000s run up?
Yes, I agree. The market is hyper-focused on one name, but we are focused on the entire ecosystem. In fact, we think there are a lot of opportunities outside. You take a supply chain, for example. If we take a step back and then think at high level, there's such supply-demand imbalance. The demand remains so robust, and we are having supply chain issues. So one can say that when there is such imbalance between demand and supply, there's pricing power, there's new profit pools. And then also, with AI, we're really redefining the future business models. So you can actually find future winners and losers. So it is not just on one stock, it's rather the accelerated compute, the impact on the future of technology, and frankly, the future of economic growth.
Lei, I tried to speak to Jensen Huang about the energy component of the supply chain. Let's listen to what he said.
The most important thing that we do is increase the performance and efficiency of our next generation. So Blackwell is many times more performant than Hopper at the same level of power used. And so that's energy efficiency. More performance with the same amount of power or same performance at a lower power.
Jensen looks at the energy component through the lens of Blackwell's greater efficiency. How do you look at the energy component of accelerated computing?
We certainly are very constructive on the energy efficiency of the future of compute, but we also are constructive on the physical infrastructure aspect of it when we look at how the data centers will be powered, and so much greenfield power is actually needed. So we're quite constructive on the physical infrastructure of it. In fact, if you take a step back and think about the digital infrastructure has actually leapfrogged the physical infrastructure of many developed nations, and we find many interesting plays there as well.
Lei, how do you balance all of this? The chaos around Nvidia earnings, a single name. All of the central banks speak and all of the economic data in 1 week. What was that like for you and all the things crossing your desk?
Well, that's the excitement about being an innovation investor. We focus on the secular story, the stories that's going to drive stocks, fundamentals, regardless of what central bank will do. So we always go back to, in 2008, iPhone still sold. So irrespective of economic cycle, when we focus on fundamentals, that's what active investment is about. We find stories that will grow irrespective of cyclical backdrop.
So if you're looking active at the moment, and you see the run-up in valuation of certain companies that we've all become completely euphoric around, how do you broaden that out? You said look at the supply side. Am I automatically thinking, okay, go global here, look at a TSMC, look at some of the Japanese suppliers that feed into an Nvidia? How are you looking at the broader wealth of opportunities that are outside just certain big Mag 7 names?
We go back to the fundamentals. We're active investors. So we look at each company with respect to its own growth opportunity. Obviously, at a high level, we are thematic investors. We look at how big the secular trend is. Then we look at the demand-supply imbalance and the longevity of it. And then we do look at it at a global level and find who are the future winners and losers. Again, go back to, it is a time of change, a time of inflection. And when time of inflection, sometimes we will find the market will underestimate some of the growth opportunities of different parts of the supply chain. And that's what we focus on. One stock at a time, and how strong the growth momentum is, and more importantly, are they going to get majority of the future profit pool? How the industry is being reshaped, that's what we focus on.
You talk about this highway, and everyone is really focused on the infrastructure play, but everyone's trying to work out, particularly the VC community, where the value is in the applications. You talked about healthcare, about advertising already adopting generative AI, but where are some of those long-term opportunities? Where's being undervalued and underappreciated, and where can adopt generative AI?
So at a high level, I would say we're still early. And being an innovation investor, sometimes it does require a touch of imagination, if you will, because the future has yet to come. The future is the best part of it. But I would also point to, we are already seeing, this time is a little bit different. So if you look back the past 15 years, it's about the consumer electronics. You're seeing the killer app. We call them a killer app simply because we can touch and feel. But that said, this one is about the infrastructure upgrade. So it's less obvious, but that doesn't mean the opportunity is not as big. When we look forward, we can see the digital manufacturing. When we think about the reshoring, how much we're going to need on the automation side, and then also the future of robotics. Those are some of the areas that we think we're going to see a lot of great opportunities ahead.
Love having you on to talk us all through your thesis. Lei Chu, Chief Investment Officer of Thematic and Innovation Equities over at AllianceBernstein. Really thoughtful conversation. Meanwhile, coming up, a clash between Brazil and Elon Musk. It's heating up as the country threatens to block X within the next 24 hours. That conversation's still ahead. What are you watching, Ed?
Earnings still happening. There are other names, and one of them is Dell. And Dell is a part of the AI story. It assembles the servers that go into data centers, adds other components, and that helped it with its earnings report in the quarter, gone up 1.4%, which we'll get more on later in the program. This is Bloomberg Technology. A win for Elon Musk. There's been a dismissal of a lawsuit claiming he pumped up the price of the Dogecoin into a $258 billion, quote, pyramid scheme. Investors who lost thousands of dollars investing in the coin blamed Musk for promoting Doge or Doge to millions of followers on X. A New York federal judge dismissed the claims, finding that Musk's statements were, quote, aspirational rather than factual and susceptible to being falsified, and no reasonable investor could rely upon them. Meanwhile, a clash in Brazil for Elon Musk. The country's top court justice is taking on Musk's companies as he vows to shut down X and blocked Starlink's bank accounts in Latin America's largest economy. Elon calling the Supreme Court justice an outright criminal of the worst kind. Bloomberg's Kurt Wagner has the job of joining us and explaining what is going on. Let's start there. Kurt, what is going on?
Yeah, so this has been ongoing for a while now. This judge, as you mentioned, Ed, has been trying to get X to take action against certain accounts on the platform, right-wing accounts, misinformation, things like that. Elon, as you know, a self-proclaimed free speech absolutist, is saying, hey, we're not going to do that. We're not going to remove these accounts or adhere to your demands. As a result, he, a few weeks ago, even shut X's operations in the country. Now the judge is saying, well, you need at least a legal representative here in the country in order to operate. And if you don't appoint one, we will remove the app entirely. It sounds like X is not going to appoint someone. So now we're in a bit of a standoff here, waiting to see, is this judge really going to follow through and ban X in Brazil?
And this is where Elon Musk's conglomerate of companies suddenly comes to bite him, because this judge isn't taking action just at X alone.
That's right. I mean, this is the universe, the Elon Inc. universe, right? And to get to X, the judge is going through Starlink, which is, Elon's one of Elon's other businesses. And so freezing bank accounts there in order to take money for fines that X owes, right? And so to your point, Caroline, this is a great example of where running 6 different companies, especially in countries where there are adversarial relationships, can really be a detriment to him. And this was something that when Elon first bought X was a real concern. Would there be governments across the world that would apply pressure on Tesla or Starlink or something else, XAI, in order to get to the speech-related issues that happen on X? And we're actually seeing that play out here in Brazil.
Kurt, I know this seems like a very simple or basic question, but what is X's footprint in the country of Brazil? Like, do they have a big office with hundreds of people working there? What are we talking about operationally?
Yeah. Operationally, I believe it was somewhat small compared to a lot of, certainly where they operate in other countries like in the US or even in Japan. I think from a user-based perspective, we don't know exactly. I've seen estimates between 20 million and 40 million active users there. My understanding is it's around the 3rd largest market for them from a user base, behind the United States and Japan. So, significant for sure. Brazil is a country where, people are very active online, very active on social media. WhatsApp is huge there. Instagram is huge there. X is huge there. So this is a significant issue for them. I don't know if that usage necessarily translates to a huge revenue driver for the company, but regardless, the optics, and taking a country of such importance and significance in the world, but certainly in Latin America, off of X entirely is a big deal if this ends up happening.
Now, we're used to Elon Musk firing out on his own platform, but he's got some fighting talk for this Supreme Court justice, in particular saying that ultimately he is an outright criminal of the worst kind, masquerading as a judge. What sort of implications is this going to have for Elon Musk to say that sort of thing?
Well, it's hard to imagine this bridge being rebuilt at any point in the near future, right? I mean, he's sort of going scorched earth here on this judge. I believe he also posted an image that was created by Grok, his AI bot, that showed, the judge behind bars, basically saying you're going to jail, right? I think, when you have someone like Elon who's known to lash out at his competitors, who has almost 200 million followers on X, I mean, these are serious, attacks, right? And we'll see what's going to happen, but I think the bridge there is burnt quite aggressively.
Hyde Wagner, we appreciate it. Thank you. Plenty more. We're going to be thinking about Alibaba next. Stay tuned. This is Bloomberg Technology. Time now for Talking Tech. First up, Alibaba has won the endorsement of China's antitrust watchdog more than 3 years after a probe into alleged monopolistic behavior. Now, the State Administration for Market Regulation saying the company has ceased the anti-competitive practices. You look at the share reaction. The move suggests that Beijing is actually keen to signal support for the country's internet sector. Plus, Chinese EV makers feeling the impact of EU tariffs. Now, Chinese brands accounted for 9.9% of EV registrations in Europe in July. That's down from 10.2% in July of 2023. It's all according to the researcher Dataforce. Automakers have been scrambling to adjust to the introduction of new tariffs on July 5th that raised duties on Chinese-made EVs to as high as 48%. Meanwhile, Uber planning to expand its South Korean business and step up its bite with domestic rival Kakao, which has more than 90% of the country's market. Now, Uber CEO Dara Khosrowshahi is making his first official business trip to the Asian nation, saying the company is making headway in the region as rides jumped almost 8% in the first half of 2024. Ed.
Okay, coming up, Nvidia in talks about joining in that OpenAI funding round along with Apple and Microsoft. It's like transfer deadline day for AI companies raising money. We will have the details. This is Bloomberg Technology.
Nvidia, now one of the world's most valuable companies, emerged from an industry often misunderstood: gaming.
This is the Xbox.
The public witnessed the first major triumph when, in 2001, Microsoft's then CEO Bill Gates decloaked his company's inaugural competitor in the console gaming battlefield. It was a vital stepping stone that aligned Nvidia hardware with PCs bought by hardcore gamers keen on upgrading their computers' components, something they couldn't do with consoles.
But something else happened during those 20 or so years. People started to ask, if these things are so good at transforming code into people and vehicles, could it work the other way around?
GPUs excel at something called parallel computing, taking a complex problem, dividing it up into small sets of calculations, and solving them in parallel very quickly.
A lot of the time, you see that there are runs on these graphics cards because they have a lot of applications even outside of gaming.
More recently, companies acquire GPUs en masse for use with artificial intelligence. OpenAI's ChatGPT, for instance, uses Nvidia hardware. Nvidia became the leader it is today by advancing technology designed for games but valuable to disparate industries. It knew far in advance that to succeed, it needed gamers.
Bloomberg Originals taking a look back at how Nvidia gained dominance in the AI industry. Check out the full version, 9 minutes, YouTube, Bloomberg.com. It's pretty astonishing. Let's have a little think about what shares of Nvidia have been doing this in its fiscal second quarter week. 5 days, we are down by around 8%, 9%. This is actually the biggest weekly decline going back to April. That's the kind of response we had. We've talked about, Caro, how the bar was so high. A stock that was up 150% year to date, almost 1,000% from its October 2022 bear market low. I don't think I've experienced a week like this in the context of one single name's earnings, but it's been a ride. Let's just say that.
$300 billion almost wiped off in terms of market capitalization, but still got some cash to splash. And in fact, sources telling Bloomberg that Nvidia is in talks, Ed, to join a funding round for OpenAI that would value the AI startup at more than $100 billion. Apple also in discussions about participating, joining Microsoft and Thrive Capital, who've already been backers of this company. Let's get right to it. Bloomberg's Mark Gurman has been reporting this out with people like Ed and others. Why would Nvidia want to take a strategic stake in OpenAI?
Well, it's so interesting. So it's Nvidia, Microsoft, and Apple, the three most valuable technology companies in the world. And they all happen to have a vested interest in the success of OpenAI. The reason Nvidia has been so successful over the past 2 years and change is because it's selling a ton of its accelerators and other components like the GPUs mentioned in that original to companies like OpenAI and others that are powering features on the cloud like ChatGPT, Alexa, and other types of AI services, right? And Apple obviously is integrating ChatGPT into iOS 18 later this year. And Microsoft's almost entire AI strategy is heavily reliant on OpenAI. And so they all have a lot of vested interest in their success. They know that OpenAI is important to their products of today. And it's also possible, like in the case of Apple, that it may be even more critical and get expanded over the next couple of years into their ecosystems, right? And so not only do they have a vested interest, they want some skin in the game. They want to be there at the table. And to do that, you have to put in $100 million plus.
It's not straightforward. And my understanding is, I mean, look, $100 million is a drop in the ocean for Nvidia. But my understanding is that they kind of want to know what's going on, right? You get almost a seat at the table. I'm not suggesting a board seat or anything like that. But at least they would know what's going on, broadly speaking. It's completely different to Apple. Like, the Apple side of this for me is the bigger bit. What's your understanding of Apple's motivations to be on the cap table of OpenAI, Mark?
Well, Apple wanted a board observer seat, right? They wanted to literally be at the table. They wanted the same access that Microsoft had, despite a lot less of a deep partnership and a lot less money invested. For various reasons, OpenAI pulled out of that board observer situation with both Microsoft and Apple last month, actually in July, right after agreeing to the Apple board observer seat. So that fell apart. The next best way to be involved and have a seat at that figurative table is to sort of join the cap table and be an investor here. ChatGPT is important to the new version of the iPhone and iOS, given that's going to be an option as part of the new AI services on the phone. But over time, you know, Apple's internal AI strategy, I would say, is kind of weak. And at some point, if they don't get up to snuff, they're going to have to make a decision to really partner with some sort of deep generative AI integration. And there is no better partner at this point than OpenAI. And so by making an investment, by helping out OpenAI, by being involved, they give themselves options for the future, but also have a better understanding of what's going on there for a current partner.
But Mark, once again, it's integral large language model makers and the same big tech companies. We saw it with Anthropic, you're getting it with an OpenAI. Regulators can't like this.
Yeah, I'm sure they don't like it. But there's, I guess, at this point, the only thing they can do is try to stop it. We've not seen any evidence that they're going to try to pull apart these investments in OpenAI from Apple, Nvidia, and Microsoft. It's unclear if OpenAI is blocking investments from other types of companies, so we have to really see how open this is. And I think regulators are probably going to wait and see what the final numbers are. Again, this is all fluid. Nothing is finalized here. There's a possibility that Apple, Microsoft, and Nvidia are not part of this. I would say that is extraordinarily unlikely. But I think we're a couple weeks too early for regulators to start creating problems for these investments. But if they do go through, you can be certain they will.
Yeah, I don't think this is the end of the story, but we're certainly all across it. Bloomberg's Mark Gurman, thank you very much. Now, coming up on the show, McAfee launching the world's first automatic and AI-powered deepfake detector. we'll discuss with the CTO next. Caroline, some more earnings, some more movers. What's going on?
Yeah, MongoDB actually basically the best performer on the NASDAQ at the moment in terms of the bigger names, more than 15% higher earnings. They're rising because the database software company basically is strong for the second quarter results, beating expectations. Some analysts really saying these are encouraging results. They're accelerating growth. And although not all is perfect, says Barclays, the overall growth rates have come down, but a stronger new business quarter in the Q2 is clear. This is Bloomberg Technology.
Let's go to check in on the markets. I'm thinking quite a lot about Bitcoin. And for everything that's been going on, take a look at the last 5 days or so. We're down below 60,000 US dollars per token. There was a period of the week where we were slightly up. At the beginning of the week, we were slightly down. It's been behaving in part like a risk asset in line with everything else that's been going on. There is some political adjacent headline that might be a factor here, Caro. I honestly don't know because I've been quite busy looking at other stuff, but that's the headline that I see on the Bloomberg terminal.
Well, blink and you miss actually some fundamentals here, Ed, because this is supply and demand dynamics when it comes to crypto and Bitcoin in particular. Sonali Basak has it all, and there's been some great data crunched on ultimately how much Bitcoin certain governments own and whether they might sell it.
Yeah, and it's interesting. Remember, many of these governments seize Bitcoin as part of looking for criminal activity that's happening within the Bitcoin universe, anything that they might seize from people that they're prosecuting. And so the numbers are quite large. The U.S. administration holds more than 200,000, China 190,000, Ukraine holds some as well. That was also in part through donations, remember, to finance their part in the war. But when you look at what's going on, a lot of this is because of a written by Kaiko as well, about that supply issue, that overhang that could be to the tune of $33 billion. I will, however, also say, for the people who bought in during August, that has been pretty frustrating, hasn't it? Because you saw a big bump in Bitcoin prices at the heels of that Powell pivot, but really you've seen almost all of that erased, all of it erased, really, since you've seen that bump. But you have, for the bright spot here, seen Bitcoin trade in a range throughout the entirety of August from $56,000 to $65,000. It didn't breach that $65,000 level. The other bright spot here, and what you could see, is thin trading volumes, both in the spot Bitcoin markets as well as Bitcoin ETF markets, where, according to Bloomberg Intelligence, you have seen as high as $10 billion in liquidity here, and now closer to $1 to $2 billion. So whether we come back from Labor Day and get past the summer slump, things could be different. It's hard to say, but it has been a pretty orderly movement this month, even if Bitcoin has not kept up with the broader market.
The politics adjacent side of Bitcoin or news that I was referring to was former President Trump and make Bitcoin great again. Actually, the quote is that he wanted Bitcoin to be mined, minted, and made in the United States. But ahead of the election, that's a factor, right?
It certainly is. And remember, when it comes to Bitcoin mining, a lot of that is really done based out of China. It is a Shanghai-based firm and Beijing-based firms that are much bigger in the Bitcoin mining space than what you see here in the United States. But it's not for the lack of trying. Block is coming out with a service, or has come out with a service, that you've seen some movement towards in recent days. But there's a long way to catch up here, Ed. And a lot of energy needs to help that catch up happen as well, and a lot of infrastructure. Next week, we're going to be tackling this issue for Bloomberg Crypto at 12 p.m. on Tuesday, because how hard is it to make that movement to U.S.-based firms? When we ask our guests as well how they feel about the Trump policies towards crypto versus what Harris says, we don't have a lot of information from Kamala Harris yet on how she might approach crypto. People have been very frustrated, of course, with the Gary Gensler SEC under the Biden administration. At the same time, you have had Bitcoin reach record highs under the Biden administration and multiple ETFs approved. So it's pretty hard to say at the end of the day. They just want clarity. And it should seem like we get more of that clarity in the coming months to come.
Bloomberg Sonali Basak, happy Friday. Thank you very much. I just want to switch gears. Computer security company McAfee has recently announced a new tool that will help users figure out whether the audio they're listening to in a video is real or a deepfake. It comes at a pivotal time. We've just been talking about how we're around 2 months from a US presidential election. Remember, earlier this year, we saw an AI robocall scam that impersonated President Biden, urging voters in New Hampshire to skip voting in the primaries. Steve Grobman is CTO at McAfee and joins us now to discuss. I actually want to start by asking you, why the tool now? Why didn't you do this sooner?
Hey, Ed, thanks for having me. You know, one of the things is we're at a pace at McAfee in the industry where we now have the power to build this type of technology tool and make it practical for consumers. Part of that is what we've developed. There's a rapid investment of innovation in McAfee, but also new technology in the industry. So, for example, McAfee Deepfake Detector that we launched last week, it takes full advantage of the neural processors that are in the latest generation of AI PCs. And it's that hardware plus software combination that really makes this practical so that users can run the analysis on the audio, looking for whether something is real or fake continuously without impacting power performance.
Okay. There are some constraints on the rollout of this. It's limited to a certain extent. But I just want to say it again. It's an analysis of the audio in a video. And it took me a while, Steve, to kind of get my head around that. Why is that approach important, audio review on a video?
Yeah, we looked at this very closely when we started our research into deepfakes. And one of the things that we found was almost every fake video has fake audio, but often there's no fake video element of it. So sometimes it's going to B-roll, sometimes it's just using the real video of somebody and having fake audio. So by tackling audio first, we're able to cover the most scams and disinformation that's really harmful to consumers. You know, we know that deepfake audio is used for all sorts of purposes, some of it not harmful. There's a lot of AI parody videos out there. That's fine. But what we're really trying to help consumers detect is when they're looking at something like an investment scam that has a celebrity or a well-known individual making statements, and it is that deepfake audio that then they can detect, oh, like that's actually generated by AI, and I need to be a bit more careful. And especially, you know, as we're 2 months away from the US election, anything that we can do to help arm consumers with powerful tools to detect disinformation is super helpful.
It's really quite interesting, almost fun, basically, going onto your website and looking at how you're helping people. No, Taylor Swift won't send you a free Dutch oven. And it's showing that there's a lot of B-roll of Dutch ovens used, and apparently it's Taylor Swift, but it's not when you check the audio and you look at other ones, like Gwyneth Paltrow, for example. Steve, though, going back to what Ed said about the limitations, how can we broaden this out? How can it be that anyone with any computer, any phone, can start to use your technology?
So this is our initial launch, and one of the things that you'll see from McAfee is this is the first inning in a long game, and we're not stopping here. We have a lot of great technology that's in the pipeline that's looking at all sorts of other elements around helping consumers detect AI-generated content. We announced some partnerships with Intel a few months ago, and you're going to see some great things from us in the future. So while we're super excited about what we launched this week, because it's real product that we can get in the hands of consumers to solve a really difficult problem, it's just the beginning, and there's a lot to come.
We've got an audience that loves the nitty-gritty of the problem. How difficult is it? What technology have you used yourselves to uncover these deepfakes?
Yeah, it is a difficult problem, but it's one of the reasons I'm so proud of the technologists, the data scientists we have here at McAfee, because we tackled this and we invented a lot of new technology, but we also worked with our hardware partners. The great folks at both Qualcomm and Intel have been working with us for months. We've been working with our OS partners, with Microsoft, and we built new AI algorithms that are basically detecting AI-generated content. So you can almost think of it as we're building good AI to detect AI-generated content that could be harmful to consumers, and really giving them the tools that they can use in conjunction with a better education of understanding that threats and scams can be AI-generated to protect themselves. And one of the ways that we're doing that is in conjunction with the launch, we're also launching an AI hub, which is a website that really focuses on the education side. So it's this combination of technology and educating the general public to keep themselves safe from this new wave of cybercrime that can be really damaging. We've seen some of the AI scams can take anywhere from $250 to $500,000.
Steve, when I was a kid, I had McAfee on my personal computer, either to clean it up or for some sort of protection. In this day and age, and sorry for the sort of washy statement, what's the business model for you guys in trying to fight deepfakes in an election cycle?
So McAfee is committed to keeping consumers safe from digital threats. And that means all sorts of digital threats. So the classic digital threats with malware, dangerous websites, we're still heavily invested in that, and that's a big part of our business. But we know that keeping consumers safe is much, much more. It's protecting consumers from disinformation, from scams, helping them protect their identity, and really all of the things that are going to be the forward-looking challenges for consumers in 2024 and beyond.
Steve Grobman, great to speak with you, CTO of McAfee. We appreciate it. Now coming up, Dell getting a revenue boost from its AI servers. We'll unpack the results. Coming up next, this is Bloomberg Technology.
Dell delivering better than expected earnings. The company's second quarter revenue jumping 9% to $25 billion due to an increase in its sales of its servers that handle AI workloads. Woo Jin Ho of Bloomberg Intelligence joins us now. And it is the AI optimized server. And what I'm trying to understand still with Dell, is this because they're an essential cog of the data center build out, or there's a value add that they bring for the AI optimized server? Woo Jin.
Yeah, hey Ed. So there is a value add that Dell offers that others have a tough time doing. If you think about how some of these AI factories are being built out, they're building out clusters and clusters of AI servers. We're not talking about one particular server, but we're talking about hundreds of servers. Case in point, they did $3.1 billion in AI server sales. There's only one other company that I'm aware of that exceeded that, and that's only Supermicro.
And Supermicro has some issues at the moment, but I'm interested in the profitability of this. Sure, revenue goes higher. Sure, they're selling some expensive equipment, but how much are they getting in return for it, Woo Jin?
And that's a fantastic question, Caroline. And I think heading into the print, there was concern on the margin profile of AI servers. The one thing that I do want to dispel is the myth that it's a zero margin business. It is a low margin business. I think it's probably in the low to mid single digits. If we saw the ISG margin, which is where AI servers reside, that improved sequentially 300 basis points. Part of it is product mix, but also the customer base. I think there was some prudence in the quarters in terms of deal making for Dell.
We keep an eye on Dell rising after what has been a revenue jump. That profitability is still being ironed out by Woo Jin Ho. We thank you so much, Bloomberg Intelligence. And just take a beat to be like, that is the end of this edition of Bloomberg Technology. Ed, what a week. What a powerful set of interviews you've done.
Yeah, it was interesting to speak to Jensen Huang. I have this question still whether Jensen Huang needs Michael Dell more than Michael Dell needs Jensen Huang, and I think we can continue to look into that. But astonishing across the world of technology. Recap today on the podcast. You know exactly where to find it on the Bloomberg terminal, as well as online at Apple, Spotify, and iHeart. Big thanks to the team in New York, Caro, Jackie, Caitlin, piles of very leading interviews here in SF. What a week. This is Bloomberg Technology.